Best Kraken Pro order types explained? Ever stared at the Kraken Pro order screen, feeling overwhelmed by choices like limit, market, stop loss, and thought, which one should I actually use right now? If you've been relying only on the market order because it's the easiest, you're likely paying more in fees and missing out on crucial risk management tools. In this video, I'm going to walk you through the essential order types I personally use on Kraken Pro, explaining exactly why and when to use each one, based on my own trading experience. We'll cut the fluff and get straight to what matters for better execution and safety. The default market order and why to use it sparingly. A market order is the simplest. I'm telling Kraken, buy or sell this asset right now, at the best available price. When I use it, honestly, I use this very rarely. Only when I need an immediate execution, and I prioritize speed over the exact price. For example, if there's a major, sudden news event and I need to exit a position instantly. The downside, you are considered a taker, which means you pay the highest fees on Kraken Pro. You also risk slippage, meaning the executed price might be slightly worse than what was displayed due to market volatility. The go-to limit order for better pricing and lower fees. The limit order is my bread and butter. I'm telling Kraken, only buy at this price or lower, or only sell at this price or higher. How I use it. Buying, I set a buy limit below the current market price. If the price drops to my level, my order fills. This ensures I don't overpay. Selling, I set a sell limit above the current market price. If the price rises, my order fills. This ensures I lock in my profit target. The benefit, when a limit order is placed and sits on the order book waiting for a price match, I become a maker, which means I pay significantly lower fees. Sometimes, on Kraken, the maker fee is zero. This alone is a huge advantage over market orders. The safety net, stop loss order, crucial for risk management. A stop loss order is the most important order type for protecting my capital. I'm telling Kraken, if the price hits this specific stop price, trigger a market or limit order to sell and limit my losses. The scenario, I buy Bitcoin at $40,000. I decide I will exit if the price drops by $500. I place a stop loss at $39,500. If the price falls to $39,500, my stop loss triggers and my position is sold. Why I use it? To ensure my losses are managed automatically. I don't have to watch the charts 24/7. This is non-negotiable for every single trade I enter. Never trade without one. The advanced option, stop limit order. A stop limit order combines the stop trigger with the limit order execution. I'm telling Kraken, if the price hits my stop price, place a limit order at my specified limit price. The trade-off. Pro. It guarantees that I won't get caught in severe slippage, which can happen with a standard stop-loss market order. Con, if the price drops too fast and skips my limit price, my order might not fill, leaving me with an open position. My recommendation, for beginners, start with the standard stop-loss, which executes as a market order, until you understand how rapid price swings affect the limit execution. Summary of my strategy. Entering trades, long-term/swing, always use limit orders to save on fees and control my entry price. Exiting losing trades, risk management, always use stop-loss orders to automatically limit potential losses. Exiting profitable trades, profit-taking, always use limit orders to set my profit target and ensure a better price. Mastering these three, limit, stop-loss, and understanding the downsides of market, will fundamentally change how you trade on Kraken Pro, saving you money on fees and protecting you from major downside risk. With that said, thanks for watching, and until next time.